What is going on, everybody? Bitcoin Birch coming to you here with BTC Jack Sparrow and Kyle. What's going on, boys? We're here with another episode of Crypto Live on this beautiful Friday. It is a cold day, blustery day here in Chicago. So grateful that you guys are with us on Spotify, iTunes, YouTube, and Facebook. Shout out to the 100 or so of you on Facebook that usually tune in. We are ready to get started. How is your Friday going, gentlemen?
Well, it's dark and cold here as well. I mean, for the people who are watching the podcast, the live stream, you can probably see outside. It's dark and it's been raining all day, so I haven't been outside, guys, which is really bad. Yeah. How are you doing, Kyle?
I'm all right, man. I've been a little sick this week, so I actually took some Mucinex PM and slept for like 12 hours and woke up and checked crypto Twitter, and the world's apparently ending. So here we are.
Let me just tell you, the 6 days now that I am sober from crypto Twitter, the 6 days of being clean from crypto Twitter, at least having the app on my phone. I've logged in. I made the commitment to log in a couple times a day to check DMs, make a couple of posts, or reply to some people, but not having it on my phone, that's me slapping the inside of my arm. It's been really nice. It's been really nice. I've been able to really focus on a lot of things, including putting in an absolutely massive short yesterday. Not so much a scalp play, but with the fund. So we are glad to be here. Just a quick reminder, anyone listening or watching, do make sure to subscribe on YouTube and smash that like button. Do please make sure to subscribe on iTunes and Spotify and leave your feedback. But also, do please remember that everything we say should be taken with a grain of salt. We're not financial advisors. We like to think that we know what we're doing, and we have had a lot of success. But you should still do your own research, make your own decisions, and just remember that regardless, without good risk management, you're going to get wrecked no matter how good the setup is. Cryptocurrency is extremely volatile, and we're just here to try to make it a little bit more fun. So on the agenda today, there are a couple of quick news stories. News is not maybe even the best way to put it. We're going to talk today about Satoshi's email and a couple of early accounts being compromised and his information being held for ransom. We're going to talk about the Bitcoin mining difficulty adjustment and kind of what that means and why it's important, if it's important at all. And then, of course, your guys' favorite part of the show, we are going to talk price action. We're going to take a look at some bounce targets for Bitcoin. We're going to share our dollar cost average strategy with those of you who haven't read what we already put into our private Discord, and we'll be sharing it on Telegram later today. So, guys, Satoshi doxed. Have you guys read this story? What do you make of this?
I've read the story, and at first, a lot of people thought this guy just basically they got his email address, right? And then people thought it may have expired, and then someone re-registered it. But there's been more proof that he actually has been sending emails that were owned by Satoshi Nakamoto and been forwarding them to people like Peter Thought and others that were around at that time and are still around, people that have actively helped developing Bitcoin and were closely related to Satoshi in terms of working together, collaborating on building Bitcoin. So does it matter whether he's doxed or not?
Yeah, I think it does, actually. We may have differing opinions, but just to catch the folks up, essentially a hacker, according to this article from CoinDesk, and it's actually been shared in a number of places. This is just the first one that pulled up when I wanted to share this link with you. Hijacks Satoshi Nakamoto's email and threatens to reveal all. To your point, Jack, there are some people saying, well, maybe he just registered an email after it expired. The email is satoshi@gmx.com. That is confirmed to be Satoshi's old email address. Now we've come to learn that he does in fact have control of this old email address and was forwarding some old emails. He claims to have Satoshi Nakamoto's full docs, which I think he's not alone in that, by the way. So I think that there are people like Hal Finney, who unfortunately passed away years back, even Peter Todd and some of these other early Bitcoin folks. I think they know who Satoshi is. I think that at least in some capacity, they have some good ideas. But why is it important? The note says, "Dear Satoshi, your docs, passwords, and IP addresses are being sold on the darknet. Apparently, you didn't configure Tor properly, and your IP leaked when you used your email account sometime in 2010. You are not safe, and you need to get out of where you are as soon as possible before these people harm you." That was posted on P2P, or actually, I can't see exactly where that was posted. That was posted in one of the forums. Does it matter if Satoshi's docs? I think it probably does, because I think it will probably be a letdown. What the guy's doing, I think what this hacker's doing is he shared a Bitcoin address, and he said, when this account hits 25 Bitcoin, I will reveal all, right? I'll reveal Satoshi's full docs. So don't send this account Bitcoin. There's 1.5 Bitcoin in it already, so he has been able to collect some money from it. I don't want to see it happen in this way, though. I mean, this is trash. This is complete garbage. Do I believe that he has Satoshi's email? Yes. Do I believe that he has documents that could point to Satoshi's true identity? It's hard not to. I don't think this is the way that we need to find out. What do you guys think?
Yeah, I think this is definitely kind of a shitty way to go about this, profit off of this scheme. I would never send Bitcoin to figure out who Satoshi is. I think it's part of the beauty of this system that no one knows who created it. Because the fact of the matter is, it's not important who created it. This is supposed to be something that the world and ushers in finance. And so the people that started this for their own safety and for the, just, I guess, aura surrounding the network, they should be anonymous, because they took a huge risk doing this. It's dangerous what they did, especially when people realize who they are and how much money they may actually possess for creating, this system.
It's estimated that Satoshi has over 1 million Bitcoin from mining in the earliest days. Because obviously Bitcoin wasn't an ICO. There's no pre-mine. So it's not like Satoshi just gave himself a bunch of Bitcoin, right? Like, he had to mine it like everyone else, but it's estimated that he has upwards of 1 million Bitcoin in a variety of different early wallets.
Yeah, it's wild. And I mean, once again, that's slightly disheartening for myself, because I don't like the fact that someone could hold, 5% of a circulating supply of a money system that I'm hoping everyone uses one day. It doesn't make any sense to me.
$3.3 billion at today's prices.
Yeah, that's wild. That's a ton of money.
That's why I think it's not a great thing if 2019 we end up finding out who Satoshi truly is, and if it's Hal Finney, I think it's a massive, I don't love it, because then it does kind of take away some of Bitcoin's competitive advantage from being just knowing the fact that it's completely anonymous, and whoever created it isn't someone who's out there as a public figurehead who could potentially be for Bitcoin. I mean, even Satoshi never could have possibly imagined that the ecosystem he created would look like it does just a decade later. So, I'd rather not know. I'd rather us continue developing. Bitcoin's an open source project.
There's all kinds of wild stories, like who Satoshi Nakamoto could be, or like what entity or group it could be. People say that, if you own, like, for example, the NSA, you have huge databases of information, emails, and whatever. You can fingerprint writing styles, and so there's probably enough people in the world who know who they are, or who he is, or and the reason why they haven't disclosed it is probably because it's not known to the people. So I do agree with you that I would much rather not know who they are or who he is. But what I find weird is that I would have expected, if you would have doxed Satoshi Nakamoto, I would have expected people to actually, say, I won't dox him if you pay me money, instead of the other way around.
I know. I
swear to God, you would have made 100 Bitcoin by now.
He would have made 100 Bitcoin by now. I know. Especially with a couple of the screenshots he shared, it's pretty convincing that he has a lot of information. To your point, Kyle, too, it's with a handful of wallets having 100 or having 1 million Bitcoin in them from Satoshi. Those have never moved. They didn't move when Bitcoin was 20K. They didn't move when Bitcoin was 200. They're not moving now. So people are already and have already kept close eye on those wallets. There's all sorts of alarms and triggers set up. The second a single Bitcoin moves from one of those original wallets, there's going to be freaking pandemonium. And I hope that doesn't happen until Bitcoin is in full mass adoption in the future. I hope that doesn't happen until we have multiple $100,000 Bitcoin. And there can be some type of a trust in place that can appropriately distribute that original Bitcoin, assuming it's not lost too. At the end of the day, Satoshi mined these Bitcoins. Who's to say that his laptop didn't fall off the boat, go to the bottom of the lake, and he lost all his private keys? Like, Satoshi could just be a dude. Satoshi could just be a dude who lost his private keys. Or the more likely scenario is it's a group of early developers who worked on this. And I think protecting that anonymity is going to is pretty important.
Like the biggest conspiracy theory is that the NSA actually, together with the IMF, has cooked this entire thing up. The NSA developed the SHA-256 in the late 80s, I think.
In the 80s,
And then they had a paper that is like 90% comparable with the Bitcoin white paper that described a digital form of currency with that was secured by the SHA-256 algorithm, and 20 years later, Bitcoin white paper pops up. Interesting.
Right. Yeah, I've heard a lot of conspiracy theories. One thing I do know for sure is it's not Craig Wright. That's what I do know. That's what I know 100% for sure, is that it's not Craig Wright. Speaking of Craig Wright, switching gears, Bitcoin SV overtaking Bitcoin Cash on Coin Market Cap. Is that going to happen? We're $2 million away.
It actually did happen already last night.
Did it pop over last night?
Yep. Quite
so
a bit.
They're pretty much equal right now, 1.75, 1.74 billion. Does that mean anything to you guys at all?
At this time, no, I don't think it means too much to me. I think SV is pretty illiquid right now. And I think that once the people on Coinbase haven't gotten their SV yet, correct?
Yeah, so that's my understanding. When we were at the board yesterday, we were talking a little bit about that a lot of people actually have been credited their Bitcoin ABC or with Bitcoin Cash, but have not been credited or have not been able to withdraw Bitcoin SV yet. So I think that plays a role. People haven't been able to dump it. I mean, shouldn't Bitcoin Cash and Bitcoin SV be worth the same? All things considered, I don't know, but it is surprising to see the run that Bitcoin SV has been able to go on. It's 2x. It's more than 2x in the last 2 weeks, just about 2-3 weeks. So with increasing volume too.
I'll be honest with you. I've been trying to kind of avoid researching this whole kind of who has the biggest penis war between Fer and Jian Wu and Craig Wright. Because honestly, what does it add? What's the value it adds to the fucking space? In my opinion, they're just a bunch of guys who are trying to fight over some kind of spot on like how do you say that, the ape rock or whatever. They want to be on top of that rock.
They want to be on top of the rock. Yeah, it's a pissing war.
Yeah,
it's a pissing war.
And it annoys the shit out of me that someone like Craig Wright is going to say, hey, I'm going to write the software that's going to mine the other chain, like Bitcoin ABC, and then keep selling it. And I'm going to threaten people that I'm going to sell a lot of Bitcoin, and by doing so, force them to actually mine his chain. And by mining his chain, also mine the other chain, but selling the coins of the other chain. I mean, to what extent is that going to help out the entire system? And why do we need one person on top that represents one chain to, dominate whatever?
And Craig Wright's come out a couple different times and said that he has information that he's going to reveal in 2019 that's going to send Bitcoin. It's going to kill Bitcoin or send Bitcoin to $1,000. He claims to be Satoshi and all this other nonsense as well. Someone just asked in the comment section, welcome and quick shout out, by the way, though, to anyone who's just now hopping on, especially on YouTube or Facebook. If you're just popping in, wondering what the hell these three dudes are talking about, this is episode 27 of Crypto Live. We are currently talking about Bitcoin SV, and we are going to be jumping into price action on some of these charts here in a second. Someone did ask in the comments, are Bitcoin whales pissed that they didn't get even lower before 2017 and are so greedy that they're breaching all markets to 2013 levels sub 1K so they can go all in? Do you think that that's a viable hypothesis, is that a lot of this downward pressure right now is just Bitcoin whales who actually are going to short Bitcoin with the sole intention to buy more of it?
Yeah, I mean, if I was if I was in charge of this space, and what I mean by that, if I had such a huge amount of BTC that I could actually fluctuate the pricing of the market, then yeah, I mean, it's what we've talked about in past episodes. It's like, I think that if I was in the position to manipulate the market to get the highest amount of profitability for myself, then yeah, I would have taken it to 20K. I would have rode that wave, and then I would have realized it's time for retracement. And I would have shorted and made money all the way down and just basically recycled the whole process. Because I think that if that is the case, then whoever's in charge knows where this space is going in the future and is not really concerned about 2, 3, 4 years of price action having any real effect on the long-term potential of this space. I think that they know that they can just ride the waves of this price and make as much money as humanly possible, and know that eventually what the space will actually provide will take it to price levels that they may no longer be able to control, but at still the same time be profitable off of all these swings, So
yeah,
it wouldn't surprise me taking it to lower levels and then just reloading and riding it back up too.
I'm not as big of a fan of that theory as, listen, Bitcoin is highly manipulated. It's been manipulated for a long time. It's not that hard to manipulate illiquid order books on any asset, let alone cryptocurrency. Nowadays, you need a lot more Bitcoin to be able to move the Bitcoin market. So that's why a lot of manipulators, if you will, moved to much more illiquid, lower cap shit coins. I don't think any whales truly benefit from $1,000 Bitcoin quite as much as we might think. I think that if that was the case, we'd see a little bit more buy pressure in some of these levels. I think more likely is this is market cycle. This is price action. This is a lot of retail traders continuing to capitulate and continuing to lose faith in crypto, especially people who are over leveraged. I think that whales will take advantage of it. I think they will be buying at 1,000, 1,200, 1,700, 2,200, 2,400, 2,700, 3,200, etc. But I don't know that any massive group is actively trying to push Bitcoin down to $1,000. You don't see a lot of that in the order books either. I do think that we are seeing the opposite of what we saw in December with permabulls and with everyone's euphoria. I think we're getting close to that point with bears. I think we're getting to that point where the bears are getting a little bit more greedy. Don't get me wrong, we've been on the right side of a lot of shorts as well, but I don't want to see Bitcoin hit $1,000. I want it to go up as soon as possible. I'll be hedged in case it doesn't, but I prefer that it doesn't go any further down. But I think we're seeing a lot of people, a lot of bears who, were calling for 3K, calling for 3K, finally get 3K. So what do? Calling for 1K. I'm calling for 1K. It's no different than when we hit 20 and everyone's like, all right, let's go to 50. Now it's only a 2X to 50K, 40K. I think we're seeing a lot of that. And because it's so easy for dumb money to short, we see shorts going parabolic. That's not institutions. The institutional guys I know aren't even trading on MEX. We have some. I mean, it is possible to register and trade on MEX, but that's not really what's happening. This is just the opposite of what was happening in December. The same thing from a psychology standpoint. It's just on the other side of the market. It's cool to be a bear. It's trendy to say Bitcoin's going to 1,000. You want to look cool in front of all your friends when you're just like, oh, Bitcoin's going to 1,700. That's when I'm going to buy. I'm going to buy it all. I'm going to buy everything at 1,700. We're not going to get to 1,700, in my opinion. I think we're getting a lot closer now to that $2,800 target. So.
Yeah, I mean, it does tie in very nicely with our entire story about the mining difficulty and miners, because I do think there is a little bit of I do think there is a bit of a correlation between the hash rate on Bitcoin going down, the fact that this increases the costs, or it decreases the profits of miners, with the price going, no, sorry. Okay, so the price of Bitcoin is going down, and the electricity cost for miners stays the same to mine a Bitcoin. So they have to go out of service. So as they drop, the difficulty drops, and as price keeps going down, these miners, they have to sell a higher percentage of every Bitcoin they mine. On a daily basis, 1,800 Bitcoins are mined, which means that if 80% of these miners are at operating at break-even cost, they have to sell 100% of the Bitcoins they mine, which means that 80% of 1,800 Bitcoins are like sell pressure there every day. So I think there is sell pressure from these people, and I think there's sell pressure from funds that Anthony Pompliano mentioned and a few other people that have to close shop because they won't be able to make any money in the next couple of years. So, I mean, besides retail capitulating, I think those are the two factors that are probably most important to consider.
Mm-hmm.
Yeah, and we're seeing the last time that we had mining difficulty drop consecutively was November of 2017. Literally days before the bull run started from 5K to 20K. So this is the first time, and this is a drastic drop in difficulty. What I'm showing here on my screen, podcast listeners, you can't see it. So for you guys, you can go to btc.com/stats/diff, DIFF, and you can see the Bitcoin difficulty yourself. And yeah, we've seen that difficulty was just adjusted down 15%. So that, that's kind of the beauty of the Bitcoin system, is that those adjustments take place to hopefully make it more profitable to mine Bitcoin at lower prices. The cost to mine one Bitcoin right now, from an electricity standpoint, shouldn't be any more than it was when Bitcoin was $200. The only reason it costs more is because it's way more difficult. So as the price goes down, to your point, that difficulty will come down with it to continue to keep mining profitable. There is a lot of people will say, transaction fees are going to continue to incentivize miners, because in addition to earning Bitcoin for solving problems, which is proof of work, they also get a share in the transaction fees. The unfortunate thing is that Bitcoin transactions right now are shit. They're terrible. They're very low. And so there's not enough transaction fees to incentivize miners. That's more of a system that I think is going to be valuable with mass adoption when when there are no more Bitcoins to mine, right? So we know that the halving in 2020 is going to cut the amount of Bitcoin reward down to 6 instead of 12, and then it's going to cut in half again 4 years later, and so forth. And when there are, theoretically, there will never be no more Bitcoin to mine, because they'll continue to cut in half until it's like 0.5 and then 0.25 and then 0.125 and so on. But at some point, there's really not going to be much left to mine for Bitcoin. And so the only incentive will be transactions. The hope is by the time that happens, a couple decades down the road, technically it won't be until the year 2140 or something that the last Bitcoin is mined. By then, there's enough mainstream adoption that the transaction fees are more than enough to incentivize miners. Right now, we don't see that. Right now, there is little to no transaction incentive for miners. And so we're seeing them shut down. Someone made a point in the comments that perhaps we're seeing miners take short positions on Bitcoin just as a hedge, the same way that we've done as well. We put in a massive hedge yesterday, and it's not the first time. We've done this several times throughout the year. It's not because we want Bitcoin to drop. It's just because we have to protect our downside if we have 80% of our Bitcoin holdings in cold storage. Yeah, interesting to note. We will continue to keep an eye on the mining profitability. Max, what you got? You're muted, my guy. I got you.
I was configuring my XSplit, but do you want to talk about option, or do we want to sandwich in some other news articles first?
Yeah, is there another news article that you wanted to touch on? The SEC ETF. Let's talk about that real quick. Van Eck. What do you know?
Well, actually, yesterday or last night, a news article appeared that there has been another delay in the decision of the SEC to rule on the proposed rule changing of to get an ETF. This is not really true in my opinion, because the first time the ETF proposal was filed, we knew that the moment it appeared in the Federal Register, it would take at maximum 240 days before there would be approval or disapproval, and no more further delays after that, which happens to be February 25th, 24th. So they kind of bring it as there has been a delay, but this has been the real final deadline for them since it was actually brought to our attention for the first time. So yeah, we're going to see a decision by February, and it's going to be final.
Yeah, so February 27th. That's exciting. I mean, now we have a date. We know when we can expect to actually hear something. And so, you know, we can debate. We've talked about the ETF ad nauseum on this particular show, and we can debate the power of the ETF, if it's even a good thing. I think a lot of people think an ETF is not a good thing. It's going to actually hurt the ability to make money from volatility on Bitcoin, things like that. I don't necessarily think that's the case. I think an ETF is a step in the right direction. I don't actually think we see it get done in February without. I don't personally think we see the VanEck get done. I think Backed is most likely to take the lead on the ETF side, but it is fair to assume, I put this in the comments, someone said, are whales trying to keep the price as low as possible and not get it run on or any bull run to assist an ETF approval, which is due in February? I will say this, I don't know, are whales suppressing the price to better the odds of an ETF approval? I don't think true Bitcoin OG whales, especially the ones who are more casual, like, you know, I've met some guys who single-handedly have like 10,000 Bitcoin, and they're just regular dudes, you know, who were mining Bitcoin in 2011. So those are a lot of the Bitcoin whales we're talking about. I don't know if they care enough to do that. I think it is, though, fair to assume that Backed, VanEck, etc., any of these guys who are going to be offering these products benefit from a cheaper product. They benefit from cheaper Bitcoin, right? So we know that an ETF is more attractive and Bitcoin is more attractive to institutional investors at $3,000 than it is at 20 or 15 or 10 or 6. So we do know that there is a benefit to having a cheaper product when the ETF comes in. Does that mean that those guys are actually responsible for suppressing the price right now? I'm not ready to say that, but
you would need a lot of confidence, or you would have to work together as whales, as institutions all together because I mean, you want in on Bitcoin, and there's obviously always going to be competition unless they're all working under the same hood. Eventually you're going to get to a price where they will all want to buy Bitcoin, and they've probably been buying Bitcoin, and they're going to start to, you know, like when it comes to trading and investing, it's about being there, being the first, you know, being able to make a decision slightly in front of someone else. And that's usually the way you're going to benefit the most. So, I mean, it would be a giant conspiracy theory to actually assume they're all working together to push the price down to get a cheaper product, because there's going to be other people who are smart enough who say, hey, well, you guys push it down, but I'll buy it from you. So there's going to be this point where you know, supply and demand is going to flip. And I think, honestly, you are right about the fact that we're playing a market cycle. There's probably some people who are underwater, who have been overexposed, who have to exit because they don't have the means to hold their breath long enough at this point. They're not liquid enough anymore. Maybe the fact that miners are shutting down, that creates a bit of extra sell pressure. But at some point, that's going to stop, you know, and and it's going to turn around, and we have no idea where it's going to happen, but we can speculate on where it's going to happen. What I'm really have you guys seen that flash crash like 2 days ago on Ethereum on Coinbase?
Ethereum! Oh my God, I can't believe I missed. I will never forget sitting on GDAX watching and this is a time, guys, where I had 90% of my portfolio in Ethereum, because this was like mid 2017. I wasn't really comfortable with a lot of altcoins yet. I had only been in the crypto space for a few years, trading only Bitcoin. And then I went all in on Ether when the ETF got declined in like March of last year. And then my bag just was huge. And so it ended up taking up, I was sitting there and it goes $300. And then I literally just watch it fall through every just and hits 10 cents, and I watched it live, and I shit my pants. I literally almost had a heart attack. Like, it was the most insane thing I've ever witnessed. Everything was over in that moment for me. And then obviously it bounced back up, and then I actually learned what a flash crash really was, and like how it happened and all this other stuff, and made me feel more comfortable. But I swore in that moment that I was going to always leave like 100 Ether buy order down at $10. You know, I swore in that moment. I even did it for a little while, and then eventually fuck this. This is never going to happen again. And then sure enough, for those who don't know, we just saw Ethereum 2 days ago on GDAX was trading around $100, and then it flash crashed to 13. It wiped the entire order book, and someone fat fingered a sell order, sold all the Ethereum, and it was against USDC. See, when I was watching it, it was against USD, but this was against USDC. And what Coinbase says is that there wasn't enough liquidity on the stablecoin side in that particular order book. Not enough people are using the USDC or whatever the acronym is for that stablecoin, and it crashed to $13. One of our buddies, though, Cole Gardner, shout out, he got filled at $55. He had some super low bids in, and he got filled at $55 and then immediately sold at 101 on the bounce back up and made a nice
congratulations
5 minutes. So big shout out to Cole. He shares a lot of content on Twitter and in our Discord, and he's really good. So let's talk about this DCA. I'm sharing my screen, but we will walk through it, and we'll probably put the link in the description. Dollar cost average strategy. Ronnie or Kyle, whichever one of you wants to kind of talk through this, why don't we go ahead and kind of give a high-level overview of what we're looking at, and then we'll pull up the charts.
Go for it, Kyle.
Go ahead, Ronnie. Oh, you want?
Yeah, you go for it.
All right. Yeah. So what we decided to do as a team here is develop a strategy around dollar cost averaging for a lot of the people in our Discord and our private community that wanted a less stressful way to accumulate Bitcoin surrounding a point of hopefully maximum financial opportunity. And the way you can do that is, you can trade the swings like we do and try and find that exact pinpoint bottom, or you can use a dollar cost average strategy where you're able to place bids scaling down from, for example, the 3,700 level down to the 1,200 level at key areas of support that we've highlighted, so that, maybe you buy Bitcoin at 3,500 and the price keeps going down as it has, but you scale your bids all the way down so that hopefully you can find the best average entry, so that when the market does return and begins to move up, you have a really good average entry you can be proud of and can be very profitable for you without incorporating the stress of watching this every day and trying to find that pinpoint bottom where a reversal would occur. So that's what we've created as a team, right? Is our Bitcoin Bravado Bitcoin dollar cost average strategy. Okay, so we analyzed a few things. When we think the market will turn around, what we believe the technical indicators are showing us from charting patterns that we've incorporated, and we've aggregated all this data to create our dollar cost average strategy, where we as a team are placing our bids to accumulate the best average entry on Bitcoin before the next bull run. Okay, so the document is fairly extensive. It's pretty thorough, and it's a great piece of work that our team has put together. And you'll see a lot of our explanations for why we have placed our bids where they're placed and why we think the timing of the next bull run will come in 2020. So we're accumulating Bitcoin at these levels because we believe that surrounding the halving for Bitcoin will be the next point where we think Bitcoin will move towards all-time highs. But to put it more simply, our DCA entries, the places that we're looking to buy Bitcoin, and the percentages of our fiat investment stack that we'll be using at those levels will be what I mentioned now. So we filled 7.5% of our fiat investment stack between 3,500 and 3,700. And then we have another 17.5% that we'll be filling between 2,950 and 3,200 USD. And we'll have another 25% that will be filling between 2,400 and 2,625 USD price per Bitcoin. So that will leave us with around 50% of our investment stack unallocated, and then 50% of our investment stack that we already have allocated down to the 2,400 level. We agreed as a team that we think that most likely we'll find a bottom between 2,400 and 2,625. So that is why we have the lion's share of our fiat investment percentage placed at that level. We're hoping to find a bottom there and then move up. But we have bids. We have lower percentage bids all the way down to the $900 per Bitcoin level. And then we're saving a portion of our investment stack for signs of reversal. So that's it's a lot of information. And it's a high level view of the document, but we'll be sharing it on Telegram today. So make sure you join our Telegram if you already haven't. And you'll be able to kind of read through our thorough analysis and follow along, as this is what we are doing as a team. So
yeah, great overview. We'll pull up the charts. Ronnie, go ahead and do that while I'm covering this here. Yes, free Telegram channel, one of the largest in the space, if not the largest, certainly the most active, is t.me/Bitcoin Bravado. Most, if not all of you, are already well aware of that particular resource. And I will link the guide in the description of the YouTube video after we upload this. I will link it there as well for Spotify and iTunes friends and family. Just go ahead and join the Telegram and keep a lookout there. Looks like we also just have some quick news coming through. Coinbase did make a blog post about their intention to list way more coins and be way more aggressive. I think that's going to help. I'm not of the belief that we're not going to see a bull run until 2020. I actually think we're going to start a nice uptrend as soon as end of Q1 of 2019. The reason I like this strategy is it gives, regardless, like it doesn't really matter when it happens, it gives us all an opportunity to say, all right, if I want to spend $5,000 on Bitcoin, how can I break it up in a way that might make me comfortable as I can kind of buy the dip and get a decent average entry. But with Coinbase, they apparently just made an announcement that you can transfer Civic, DNT, Loom, and Mana immediately to your Coinbase Pro account in advance of trading. So it looks like Coinbase is actually going to have upwards of 30 new assets added all in fairly short order here soon that are going to allow people to start trading some of these, which is, as has proven recently, doesn't do anything for price. But we know that when those downloads kick up and more people are using Coinbase and the market cycle does begin to shift, we know that those are probably going to be some cheap coins you're going to want to have your eye on, the same way we had our eye on ETC, Ethereum, and Litecoin at the beginning of 2017, end of 2016. So some kind of breaking news there. Thanks, Crypto Dad, for sharing that. I'll pull up some more official sources. What do we got, Max?
Well, let's first start with the fact that today on Bitfinex, the amount of short contracts, the amount of shorts have surpassed their all-time high. So there has not been a higher high in shorts than there have been today. We actually hit 41,426 shorts on Bitfinex, and the previous all-time high, which was on the 10th of April or around this date. I think it was the 12th of April, which was 40,719 short contracts there. So there is a lot.
Wait, so you mean to tell me that as the price goes lower and lower, more and more people want to short? Wow.
Yeah.
That is crazy. It's almost like more and more people buying Bitcoin at 20K that they didn't buy at 17. Do you guys see why we're getting increasingly closer to the bottom here? This is ridiculous.
Yeah. So, I mean, if you short, it's basically the same as selling Bitcoin. So these people are actually literally selling the current bottom. There has been an article from, I think, CoinDesk that was saying that miners in China are short selling Bitcoin a lot because they are underwater on their electricity as a hedge. Yeah. So, they're risking a part of their portfolio to short. If the price goes down, they will make less money from the mining, but their short will cover these costs. And that if the price actually goes up, they will start to profit more off their mining. So that's probably a part of what's happening right here. But as shorts go really high, there's always a chance of a short squeeze. And this is basically when price starts to revert, all the stops and liquidations of these people who are short will start to be hit, and it will accelerate price at a very, very fast pace. So in April, we had this short squeeze from the all-time high, and I think we printed $1,000 hourly candle when we saw that. So that was huge. I kind of expect that's going to happen anytime soon over the next couple of weeks as shorts start to increase while we're at the bottom. So that's something to keep an eye on. Something else that I was looking at earlier today, and it was brought to my attention by Mr. Anderson, True Crypto 28 on Twitter. The 200-week moving average is just below our current price. It's at $3,167. During the bear market of 2015, 2014, there have been 2 occasions where we actually broke it and we went under the 200 moving average by, let's say, 14 to 15%. And both times we've seen solid reactions. One time we actually bounced back up 87%, and the other time we bounced back up 152%. And if we would go under the moving average by 15% right now, we would probably hit $2,700. So that's interesting to see if that's going to happen over the next couple of days/weeks. And I do expect a major bounce if we actually touch that level. What else do we have? Let's see.
Yeah, I'll take a quick share as well. You know, we continually talk about that $2,800 target for Bitcoin right now. At least for me, that's where I'm probably going to get a little bit more aggressive, certainly with some Tether. You know, I've made 2 spot buys since we broke 6K. This will probably be one of my final spot buys. I'm definitely going to leave some for the rainy day fund in case we do hit 17. I'm going to try to follow that dollar cost average strategy pretty closely. But we have this target here outlined on my chart. For those who can't see it, outlined at around 28.75. But what we see on the daily is a bear flag, a pretty big bear flag that printed up from November 24th until now. And so if we're using just pretty basic, you know, targets from that bear flag, it spawned as a result of a 24% drop from 5,500. So from a target perspective, we're hoping to see a 24% drop on the bear flag. And 24% just happens to be, as you guys can see here, our target of 28.75. And that target was placed before this bear flag even started to break out, before this was even really identified. So 2 different indicators pointing to the same target makes me increasingly bullish with that target being in place. And the other thing I'm watching here closely is that since we had that capitulation candle that we talked about, we've seen the response that we expected and the response that we talked about on the podcast and live stream quite a lot, actually, which was capitulation down. We said that we would see a bounce. Our target, we were off by about $300 on the actual price, but the pattern is playing out exactly the same, right? We're seeing we saw the bounce after the capitulation, the bounce at 3,400. Again, we were expecting the bounce to happen at about 3,500. So we were off by a little bit there. And then we will have probably this, I'm going to draw this up here, this curved bottom, this Adam and Eve-esque type pattern here. So it depends how that plays out. But what we will see is that, or what we will say is that we saw that bounce that we expected, and now we have this volume pattern. Okay, and what we're seeing is volume since we saw that capitulation candle on November 20th has been decreasing, especially sell volume has been decreasing over time as price has been decreasing over time. That is also fairly bullish. So I really love the 2,800 target. I think I have to start buying Bitcoin around 3K just in case we have a solid. I think so many people have orders at 3K. Like you almost have to expect a big bounce there. So I do want to play a scalp bounce at 3K, but I still stand and hold my target here right around that 3K 2,800 mark. That's really where I'm hoping to flip long, but I will be prepared to DCA if necessary. What do you guys think about that?
Yeah, I'm gonna DCA down, and I actually already bought. Probably already invested like 25% of my intended stack right now. But yeah, I'm gonna invest another 25 in between like 2,800 and 2,400. about 2,900, 3K. For me, it's money that I don't necessarily need. It's money that I know that's probably going to be worth a lot more in the future. From that sense, I'm not willing to miss out on that opportunity. Even if we go to 1K, I do think that in the long term, like 2021, this Bitcoin will at least be worth 10 times more than it currently is. So I'm going to buy every step down the way.
You heard it, guys. You heard a target, $31,000, $32,000 by 2021. You heard it here first on Crypto Live by BTC Jack Sparrow. All right, guys. If there's anything else that you two fine gentlemen want to add, I think if not, we will leave it at that. Anything, boys?
I got one tweet for you. So I know how much we love crypto Twitter right now. But I actually, you know what? 95% crypto Twitter is trash, and I stand by that. But sometimes there's good stuff. And this is not from someone within our community, but I do like some of the stuff he tweets from time to time. It's from Day Trade Jeffrey, so shout out to him. And he tweets, "Close your eyes. Remember how you felt when BTC hit 20K. Now remember how you felt when it corrected 60%. Use the first feeling as an indicator to sell and the second feeling as an indicator to buy." And like, it's a simple tweet, but it's so, I was just sitting here reading that. I was like, that's the truth, man. Like, I mean, when it was 20K and I was planning my life of riches ahead, like that's time to sell. And now when, you know, everyone is depressed and hating each other and there's no point in being in this space because it fucking sucks. It's like, now's when you buy, now's when you get better. So
yeah,
don't forget that, because that's how markets work. They play on your emotions as humans, because at the end of the day, it's humans that are doing these markets. So, you know, counter trade your emotions.
I love it. That is a great parting word. Ladies and gentlemen, please do make sure to smash that like button and hit subscribe if you're on YouTube. If you're on Facebook, join the fun on YouTube next time. That's where we do all of our live chat. So Facebook, friends, we appreciate you. Hop over to YouTube, Spotify, and iTunes. Continue to leave feedback. We appreciate it. And for the rest of the Crypto Live crew, we will see you guys on Monday. Cheerio.
Cheerio, yo.
Yep.